Welcome to the Not Unreasonable podcast. I'm your host, David Wright, an actuary and reinsurance broker. This is a show of interviews with people who have something to teach us about managing our businesses and ourselves. There's a lot to learn out there, folks, so let's get to work. This show is brought to you by Beach, where I work and have worked my entire career. We are a global reinsurance intermediary, and we pride ourselves on creative thinking, deep analysis, and client service. Those three qualities are actually intimately related because you can't spend the energy digging deep into a problem unless you really care about the client. We find that when you really do understand the problem, the solution becomes obvious, even if it seems a little bit unorthodox to the outside world at first. The nature of insurance is to take solutions we know and trust and try to force them onto the problems of the day. We just don't settle for that. You can see further at beachgp.com. If you're an actuary, you, like me, probably dread the professionalism continuing education requirement. I think that the best time to satisfy this is in podcast time, while on your commute, while walking your dog, while mowing your lawn, while doing the dishes. Head over to notunprofessional.com where, for the price of a CAS webinar, you can get content dedicated to continuing education for actuaries, especially Professionalism CE. That's notunprofessional.com. Thanks for listening, and thanks for supporting the Not Unreasonable podcast. My guest today is Bill Jenkins. Bill is the founder of Agile Insurance Analytics, a consultancy specializing in insurance data solutions. Bill has had a variety of technical and management roles over his 35-year career, including as CIO of a broker and carrier, and board member of various organizations, notably including being among AM Best's first outside directors. Bill, welcome to the show.
Thank you, David. Pleasure being here.
So you've had an enormous amount of experience managing the technology side of the insurance business, and what's interesting to me about your experience is that you have it both on the carrier side and on the broker side.
Right.
And one of the things that I think is underappreciated in the insurance business is actually how much technology there is in it, because so much of it is in the human side, and we think of ourselves, obviously we are humans, interacting with other humans.
Right.
I'm wondering if you could give an overview of kind of the technological chain of insurance from kind of the first interaction an insured might have with a risk, all the way to who knows where it ends, claims payment, I don't know.
Okay, well, there's a variety of ways you can attack this, David. Obviously, personal lines type of insurance would be a different approach than would a commercial lines policy. So let me talk about probably the biggest market is the personal lines market.
Yep.
And the initial input that would be taking place in that process would be through an agent, independent agent. And I'm leaving out the direct writers right now as well as exclusive agents. Mm-hmm. And today, as you know, most individuals are connected to the internet.
Yep.
And I think I saw a statistic that indicated that over 90% of the people who are with mobile devices are connected to the internet, and 98% of those do their shopping on the internet, at least gather information.
Oh, I mean, I totally buy that, and
right.
I do almost all of my shopping online, almost all of it.
Right.
And I'm interjecting here a little bit, but I'm
sure,
from Canada
please.
Originally,
Yeah.
and Amazon.ca is a pale imitation of Amazon.com.
Right.
So the Canadian version of it, the amount of online shopping you get done in Canada is dramatically less. It's a whole different game down here.
Oh,
it's
certainly.
phenomenal.
Yeah, certainly.
What you can do, it's just incredible.
So that what that requires, obviously, is for the agent to have something to attract the potential insured, the policyholder. And in order to do that, obviously, they have to have a presence on the internet, and they should have a web page that is attractive to individuals and gathers their attention.
Right.
So as part of that also, they need to have a degree of robustness to make sure that they can accommodate mobile phones. Mm-hmm. And the mobile phone also would be used by the agent's producers, the individuals who go out and sell insurance, to do quotes. Okay. And so therefore, they have to have a pretty robust presence on the internet. The third thing that an agent really should have is basically a CRM, customer relationship management system, so they can sort and categorize their potential customers.
Yep.
And obviously, they want to have some sort of social presence because people today mostly have a profile on a social presence, so they can gather information that way. The next step in the process would be for the individual who is shopping for insurance to basically fill out some basic information, and it's rudiment information because today there's a lot of technology that allows a pre-fill of applications. And it's the Accord app that's basically used in personal lines.
Yeah. How long has the Accord app been around? Is that like an eternal thing that started back in the mists of time?
I was on the Accord board.
No kidding.
Yeah, I was chairman of the board for 2 years.
Okay. What years were those?
Back in the days.
Okay.
Those years were, back in the 90s.
Okay.
So
was it a new thing then, or was that?
Accord basically was initially, as it started out, was a forms company.
Okay.
And really what transpired was ISO used to develop the forms for the insurance industry.
Yep.
And Accord took that over.
Okay, interesting.
So
How did that come about, you know?
I think ISO had different ideas as to what their business plan ought to look like.
Right, so they willingly walked away from it.
They did.
We didn't want to do this anymore.
They did. ISO, by the way, at the time was a nonprofit.
Yes.
And as Accord is a nonprofit today.
I didn't know that. Okay.
Yeah, they're both nonprofits. Huh. Both have surpluses, by the way, but in any event.
Who owns Accord then?
Accord is owned by their membership.
Okay, much like ISO was.
Much like ISO was, yes.
Yeah. So it's still owned by insurers, that being the membership.
That's correct.
Right.
That's correct.
Any non-insurers part of that?
No.
So,
no. And it's no agents either. I mean, none.
Okay.
There are agents, members. Let me take that back. What I meant was vendors.
Yeah, okay.
They're vendor agnostic, so they say.
So it's a standards organization. It's kind of like the other ISO, right? Which is the International Standards Organization,
right?
Where I grew up in this kind of manufacturing part of the world, outside of Detroit in Canada.
Okay.
And I remember seeing banners outside of these facilities that ISO 9. I mean, there's a lot of zeros in there. 90,001 certified or whatever it is, and so that's just saying we comply with this and this standard.
Right. I'm aware of that. Yeah, I'm aware of that. I got involved later on in my career around standards, especially as it related to data quality.
Yep.
And ISO 9000 was a big issue. They had a thing at the time they called the Baldrige Award. Okay. And there were certain criteria that was required that would afford a company, because it was cross-industry, the possibility of becoming a Baldrige winner. Mm-hmm. And so the ISO 9000 was basically the premise of all of that.
Yep.
So
Accord's a standard.
Accord's a standard.
Standard information. Is it the same everywhere? I think I've seen an Accord app before, but I'm a reinsurance guy, so for me it's like, this is insurance. What the hell do I know for this?
That's right. Yeah. That's right.
So it's the same for like a commercial risk or personal risk? They would have a different fields?
They would have a different form, and then there are forms, as you know, also that accompany policies.
Yeah.
And they have the charge also of developing the forms for the industry.
Oh, interesting. So there's a vendor. Okay.
Trying to standardize.
Interesting.
You would pay for the forms.
Yep.
You would pay for the use of the standards. Yep. Which they have backing away from, but I am with the understanding that they are now going to start to enforce that.
Charging for it.
Okay.
Right.
Now, the other interesting thing to me was that people don't realize the numbers of members that Accord has. And as you know, they're worldwide.
Okay.
They cross industry all insurance industries from the perspective of life insurance, property and casualty, and reinsurance. Yeah. And bonds and surety bonds.
A lot of different forms.
A lot of different forms.
Yeah.
But there aren't a lot of members. And the thrust has been, how do you make those standards more pervasive? Because larger carriers, as an example, Safeco in my day, use their own standards.
Yeah.
So Tier 1 carriers began to use their own standards because they can pretty much dictate to the agent and the policyholder what they wanted and the data they wanted to collect. Mm-hmm. But that has changed somewhat, but that continues to be an issue for them.
So there must then emerge some kind of conversion process between because they'll get an Accord form, or maybe
Right.
maybe the agent's only ever
Right.
done with Travelers, and so
Right.
now they have to convert it to an Accord format.
Right.
Does that
Right.
happen a lot? Is that...
I don't think it happens today as much because I think it's pervasive. The Accord forms are
Okay.
pretty much
It's dominant.
pervasive now.
Yeah.
Pretty much dominant. They've been able to achieve that, which has been a great achievement for them.
Yeah, that's interesting.
So pretty interesting.
Okay, so where are we at the story now? So
Okay.
they're filling out a form, and
Right.
that's electronically done these days, or how much?
That's pretty much done electronically, and as
Yeah.
you know, if you shop online, you do it electronically in your own on your own PC also.
Yeah.
So as the carrier obtains your application and has rudimentary information, they can then do certain things with it. They can either go out and augment the data that you have provided them as a policyholder applicant, or they can go out and they can find out as part of that pre-fill your loss history, all the data you had primarily furnished your past insurance carrier, and fill the application in using that
Who
process.
does this? Just there are people out there that can figure this out.
Yes, there are companies today, and I think what has transpired, Nexus Lexus is one of the companies, and I think ISO does this also. It's a pre-fill.
Okay.
And they go to companies and they ask companies if they want to collaborate with the other companies to pull their data. Kind of interesting. So you don't have to fill in all the coverages that you had before.
Right.
That's already in this pool of data that they can extract from and fill in the application with. And I think this pretty much new over the last several years as they've done that.
Wow.
But it's a voluntary type of process that carriers are doing.
So we have three big systems so far. We haven't even written a risk yet, right? So there's a web presence,
Right.
and that's probably a multitude of systems. There's a CRM process of just activating the sales process, and then there's this Accord app,
Right.
kind of series of systems.
That's correct. That's correct.
Okay, when are we going to write a policy? Coming soon, I hope.
Okay. Well, what happens then is most carriers will have a web front end,
Yep.
and the carrier will submit the data that they have collected to the carrier, and the carrier will go ahead and do a quick rating and pricing with the data that they have collected thus far.
Right. The Accord app.
The Accord app.
Right.
And the pre-filled data
Yep.
that they have received.
Right. Loss history, which is
Yes.
not in the Accord app.
That is correct.
What is in an Accord app? Maybe we should pause again on Accord apps.
Accord app is a
Name and address.
It's a template for collecting data. And a lot of carriers have built out, and agency management system have built out their front screens, their input screens, to follow that app.
Okay.
Makes sense.
Yep. Of course.
So
Might as well collect the data once.
that's correct. So the idea then is that that data is then provided to the carrier. They'll do a rudimentary pricing and rating on the data with the data they have. Then they will bind the coverage by sending you, the applicant, and the agent a copy that you're bound. You have a policy with them at a certain time, at a certain rate, with these certain coverages.
So that's all. So there's a system integration that's going on here, I guess. So there's some kind of web form or mobile phone form where you can enter in your information that gets sent to a carrier or to some kind of
to a carrier,
quote and bind system.
To a carrier.
To a carrier.
To a carrier.
And then a quote comes back.
Right. Additional information is then collected.
Okay.
And then
Last questions.
Yeah, and more questions, and the extraction and input of additional external data like MVRs, clue reports, which are loss reports, that are more robust, go back further. Underwriter will make a determination. Now, in most cases today, in personal line system, that's all automated. People would call that artificial intelligence, or I would call it old expert underwriting, and that's how we used it back in the 70s.
Yeah.
So it's just a matter of number of rules.
Yeah, organic intelligence or wet intelligence.
Wet intelligence, yeah. So what transpires then is the system will make a determination whether it will pass that data, that information through that you qualified to get this policy, or it will do a referral, which will have an underwriter take a look at it, or it will do a reject. We don't want this. It doesn't fit our appetite, our underwriting appetite. So
how many integrations do we have here now? So there's a web form, maybe it's integrated with the CRM, integrated with the Accord app, perhaps, I guess, and then that into quote and bind system is some kind of Accord front end, and then all these vendors that are pinging, LexisNexis and
external data they're bringing in.
So who manages all these integrations? Like who is there a person that says, oh, we're going to plug all these systems together?
It's a cadre of people.
Okay.
It's a cadre of people.
Yeah, at the broker, I guess, at this point.
No. It's with a carrier pretty much.
Okay, right.
So the broker basically says, here's the data I have. Here's my connection to you. It's all yours.
Why not at the broker? It seems like this is all customer service related kind of thing. I mean, some of it's underwriting.
Well, it's ease of doing business.
That's in the carriers.
That's the carrier's mindset.
Yeah.
They rely on the broker or the agent. Agent and broker are two different animals, as you know. They rely on the agent to bring them the business.
Yeah.
All right. And if they don't make it easy to do business with them, the agent goes to someone else.
Yeah.
So the whole idea is, we'll do all that work for you. Because you've heard of things called direct bill. Agent used to do all the billing. They don't do that anymore, especially in personal lines. And the carrier does all that work for them.
I'm kind of on this integration thing just because I think that this might be something that's underappreciated about how hard it is to make systems talk to you. What about it's hard and how hard is it?
Well, let me, I think I'll comment on that based on the fact that to do the mapping of the data, making sure that you understand the receiver of the information and how that format ought to interface.
Exactly what the data looks like.
What the data looks like, what format it is. Is it in field 63 or is it field 50 over here? Then you have to do the mapping that 63 maps into 50. That the data is there that you need to do your underwriting and the rating. That's always an issue.
What do you do if it's missing?
What do you do if it's missing? Working on a broker or agent side for a number of years, it became pretty interesting to me that when an agent is seeking business, a lot of times the policyholder won't give them all the data they want. So to what degree, if you're trying to get that business, do you strong arm that potential policyholder from giving you that data?
Yeah, because that's bad easy of doing business.
That's correct.
Yeah,
that's correct.
Yeah, so
from both sides, right? From both sides. So it's kind of a.
So what does a technology manager at a broker do? If all this ease of doing business, technology related, sits with the carrier, what is the broker's role?
Well, you got to understand there's different tiers of brokers. Categories of brokers.
I'm using the general term broker in this case.
I understand. Okay. It depends on how big the broker is and what they can afford to have. And that also gets into not only the staff to maintain it and support it, it also gets into how many systems they'll have there. And a lot of agents don't have CRMs, customer relationship management systems.
Right. Okay.
They still do that manually.
Yeah. Presumably that's going away, though. I mean, I feel like there's a lot of consolidation that's going on in those businesses. You just think of so many different aggregators. Our company's recently bought by a company that's buying a lot of producers and agents.
Absolutely.
And I would think that there's a scaling up that's going on, probably in part driven by the need to have these systems.
Yeah.
Do you agree with that? Is that?
I agree. Yeah, I agree. And each system is kind of interesting because, generally speaking, and I guess it's a good time to revert back to the older days. Where systems were really designed to be operational in nature. Pass through data as fast as you can. And what that meant was data that is used today to do underwriting and learn more about your customer was never captured.
Okay. Don't write it down on its way through.
It was either aggregated or it was just overwritten and gone,
Wow.
And that's the big issue with legacy systems today.
Okay.
So to make a long story short, it takes a carrier, because I just did some research on this. That's in AM Best Review edition this month. That I interviewed about 25 companies about third-party data. And one of the biggest stumbling blocks they had in using third-party data was the time and effort it took to do the data mapping. And part of that
This is
is
that integration we were talking about.
that's the integration.
Right.
And it took, on average, anywhere between 6 and 9 months
Wow.
to extract the data that's wanted, to merge it in, find a place to capture, not only capture it, but to store it so it could be used.
So, I mean, I heard, you always hear these quite remarkable references to long lead times for systems deployment.
Right.
Day to day, what's going on? Why does it take so long? What are people doing every day? Is there just that many problems to solve, or what slows it down?
Well, there's a lot of issues. Obviously, if you look at, and I think it's gotten better since I used to run IT departments.
Okay.
But over 80% of the resources in the IT department were used to maintain systems.
Yep.
And so what does that tell you? It tells you that these old systems broke easily, and there were bugs in them that required effort to address and fix. There were regulatory changes that came in that required system changes.
Right.
That was all part of that 80%. Adding new data modules to a system, part of that.
Yeah.
So what did that leave you with? It left you with about 20% to do what we call discretionary spend on new systems.
What would be, I mean, coming at this in a different way?
Yeah, please.
What would be the difference between, call it a top tier and call it middle or bottom tier organization in terms of the ability to execute on technology projects? Like, what makes the best better than the rest?
I think that's what the big movement around replacement of legacy systems has been all about, the componentized structure of systems that you can plug parts in and out.
More integrations.
More integrations, but easier to do.
Okay.
Easier to do.
Yeah, easier to integrate.
Easier to do. And as things went forward, standards were becoming more and more pervasive.
Yep.
So therefore, the data that was being captured and stored was almost the same. Part of the problem today is that vendors go out and they don't have a standard data model, or do they have a standard data dictionary or business glossary. So what happens is, if you have 10 vendors as an example, each one of those vendors will have not only their own data model, but they'll also have their own data dictionary, which would then cause...
What are data models and data dictionaries?
Okay. A data model shows the relationships between data.
Yep.
And it's broken into components.
So like a customer table and like a, I don't know,
Right.
transaction table or something.
Right.
Okay.
But it's a way to store data,
Yep.
pretty much, and how the data relates to each other, and how it goes from one row to another, and it could pick up, all right, and how you would measure it. A data model tells you how to do that, and it's a way of also tracing the data through the organization. Mm-hmm. So a data dictionary or a business glossary would say, we call, as an example, on-earned premium this.
Right.
This is how we calculate on-earned premiums. Everybody speaks the same language.
Yep. So we've named it.
So it's a
this,
standardized way of doing
okay.
it.
Right.
What you have is, if you have 10 vendors, each one of those has their own way of categorizing data, their own way of naming conventions. And therefore, if you're trying to integrate vendor product 1 to vendor product 2, you have to go through all that matching, because they don't talk the same language.
Yeah, and you got to learn about that, and then you got to deploy that. You know, one as I was kind of thinking a little bit about this conversation and preparation for it, I sometimes come back to this idea in my own head of the metaphor for technology as being another kind of infrastructure, transportation infrastructure, right?
Right.
And so one of the things that really fascinates me in kind of a dark way is this idea of legacy systems, and it's such a burden on the industry. And I don't know that firsthand. That's what everybody tells me. So I assume that that's, that they all know what they're talking about, and that's true. Right. But you don't feel as much of a burden of legacy systems in transportation infrastructure. Now, I'll pause there to say people complain a lot about the transportation infrastructure in the United States. It's deteriorating, the engineering report or whatever it is. But I think quite a lot of that there's some of that's going to be safety related, but some of that's just going to be aesthetics. Like, I don't know how often you come into New York, but you're based in Philadelphia.
Yes.
And if you drove in towards the Holland Tunnel in New Jersey there, when I first moved here 8 years ago, that was like something out of like, I don't know, like a deep third, like I felt like I was driving through Baghdad, right? I mean, it was horrific. And they've upgraded that. I think as a result of the financial crisis, they had that big, spending plan in there, and they upgraded infrastructure. But it just looks better now. I mean, you can still drive on the road. I mean, I don't know how much better it is. It kind of actually, that was a legacy system that didn't really affect performance.
That's correct. That's
But
correct.
one of the things that's come to mind as you were talking there is the idea of standards. And so I know a little bit about this, where in kind of the 18th century, 19th century, 1800s, the rail lines had different gauge tracks. And so a train couldn't go from one track to another. You literally couldn't couple them. But that changed, and they have standard gauge tracks now in the United States. And so maybe legacy systems did exist back then, but they just sorted all that 100 years ago, so we don't even know.
Yeah.
Am I on the right
No,
track
I
there?
mean, that's a great analogy.
And so legacy, so we just have this maturation phase, and that is actually defined by standards.
Yeah.
Really.
Yeah.
It's not that apps are nicer. It's just it's apps, the stuff we don't see.
That's correct. But the unfortunate part about it is, and I love that analogy, if you're going from one gauge track to another gauge track, think about how you're going to do that, how long it's going to take you to figure that out and get that done.
Yeah.
So that the train can make the pivot across.
Yeah.
That's the problem with these legacy systems.
Yeah. So we're like 150 years behind the rail technology.
Yeah.
That's all it
correct.
is.
That's correct.
Interesting.
That's correct. Yeah.
Let's pick the story back up again. So,
sure.
Here we are. So brokers,
Okay.
brokers are managing all these integrations. Actually, that's that kind of something that they do, or the broker technology manager.
Well, it's going to be the insurance carrier that basically does all that.
Okay.
Okay.
So what does a broker technology manager then do?
Not a lot.
Okay. Right.
Well, they'll interface with, they'll put in new systems, the inner office systems that the broker will use, the agent will use.
CRM, that kind of thing.
CRM, they'll do, making sure upgrades are done on the systems, that the internet is working, that kind of thing.
You can get your email.
You can get your email. So that's basically what they do.
Okay.
All right. And make sure the web page is out there.
Is that changing?
Not necessarily. Okay. Carriers are still, carrying most of that burden, as I say it.
So is that another theme that I like to think about sometimes is sort of this grand, I don't know, I guess evolution of technology and how there's an implicit power struggle maybe between carriers and brokers, because for carriers there's this disintermediation which always looms over the broker, right? And the carrier, if they just start going direct, why don't they just do that? And do you really need the broker anymore? Do you need the producer anymore?
Well, that's been, as you know, that's been an argument and discussion that's been going on for the last 15 years.
Yeah.
What's going to happen with the agent, especially with the new millennium generation coming in who want to do, want to have direct access to the carrier, want to do business directly with the carrier. But it all evolves back to making sure that they get the advice that they think they should be getting, and that's the agent that fulfills that role.
That's a human interaction.
That's a human interaction.
A market interaction.
That's going to be an individual who has the expertise that's going to tell David Wright that he needs to have this coverage because of his circumstance. That you should look into an umbrella policy as an example. What does that entail, and what are the deductibles? What can you afford? That type of thing. Agent gives that kind of advice.
So, all right. So the agents are not really all that involved in the kind of the system. And the carriers are owning all that. So let's talk about carrier systems.
Okay. So the carrier gets data, as we mentioned earlier, from the agent or directly from the potential policyholder.
Yep.
They'll do a very quick underwriting and rating process that allows you to make up your mind whether or not you want to have that carrier provide that policy for you. If you so decide you want to do that, then the policy will be bound, and it would also be generated, and then they would set up the billing system and the other systems that they might have for statistical reporting to ISO or NAIC.
Excuse me, separate
systems. Yeah.
There's a quote and bind system,
right,
distinct from a billing
policy
system.
admin system, which they call a the record. It's the standard of record.
Okay.
that they then use to create their financials with.
Okay.
And they also use to comply with regulatory requirements and report that data.
Yeah.
So
one of the things that as a reinsurance actuary,
right,
a reinsurance broker actuary,
right,
we interact with the output of different systems, and we don't know what systems they are. They just say, here's some data.
Right.
What I've observed
right.
over my career is that premium and claims pay data is the best. Because that's my usual story for that is because it's audited.
Yeah.
Somebody's using it for something other than managing exposures, and those people care a lot about where the money is, and so that's real good quality data.
Although some carriers did not do a good job at that.
Sure. Eventually they'll
and
probably
as
run into
you
some
know,
trouble.
is when they go back to collect and the reinsurer is saying, we don't match your records.
Yeah.
And you're saying you want us to pay you for this.
Yeah.
And a number of carriers have gone belly up because of that.
There's very much, I would put it this way, there's very much some natural controls in the world that exist to make sure your paid data is correct.
Right.
Right?
Right.
And I would say on a relative basis, that's better. I mean, of course, there are going to be problems relative to, call it exposure data. Right. So what's the limit on a policy? Did I buy a facultative reinsurance on this, for example, or a variety of other things which aren't audited, which aren't necessarily cash flow related until there's a claim, and so are crap, or crappier, I guess, than the paid data.
Yeah.
And another thing that a mentor of mine likes to say is that all data is dirty until it's used for something, and if it goes unused, then so that's to say the policy administration system data must have a lot of some messes in there until it interacts with this, call it the billing system or the auditing system. Right. Is that on the right track there? What do you think?
It depends on it depends. There's a number of variables involved with that, David. One would be what kind of quality control process a company uses.
Yeah.
I at one time, as part of that actuarial function that I had statistical reporting, and where the edits that the carrier had, our carrier, the company I worked for had, were not as severe as the ones that we reported data to. At that point in time was ISO. So what happened was that in order for us to turn the data around so it would be accepted by an ISO, and if it's not accepted, then you get fined. It costs the company money.
Right.
And you got report cards. Oh,
fined.
Fined. Money.
ISO fines you.
Yeah. ISO fined you. And what we had was rows of clerks who imputed data.
Right.
So as an example, they would plug in data that would get through the edits. Didn't necessarily mean that it was accurate data. It was just valid data.
Yep.
So
maybe dwell on that for a second. The distinction between accurate and valid data.
Yeah. Accurate data is accurate.
Yeah.
If you're 25 years
reflects
old.
reality.
It is. Yeah, it is. It has integrity. It's complete. It's timely. So it meets all that criteria. Valid data means it's acceptable.
Right.
It's just acceptable.
It's an integer.
It's an integer. So
or not.
Yeah. So you would find as the edits got more and more sophisticated for entry into these other systems, that people who are imputing the data would find out that their birth date, as an example, was acceptable.
Okay.
So you would find rows upon rows or fields upon fields of data with this individual's birth date.
Wow.
So obviously valid, got through the edits, but not accurate.
Yeah.
So
right.
I'll give you another classic example. Last carrier I worked for found out by running certain edits that all of the farm equipment that was being insured by the company were all Mercedes-Benz 500 sedans.
Doesn't sound right.
Doesn't sound right. Doesn't pass a smell test.
No.
Anyway.
No.
So data is important from a number of perspectives. I know that you're aware of that, but it's trying to standardize the data within the carrier that becomes a big issue.
Mm-hmm. Standardize. And what do you mean by that?
Well, making sure that everybody sees data the same way.
Okay.
That all of the dashboards that a company may have, the management information systems, everybody's looking at the same thing, and it means the same thing to everybody across the board.
Mm-hmm.
In today's world, that's an anomaly.
Yeah. Interesting. And so how about claims? So claims to me is always sat in this kind of like alternate universe. There's like a separate path of information.
Right. Right.
And doesn't connect to the policy or billing, I guess.
Yeah.
The billing would.
Yeah. Well, to finish off the premium side, then you have the stat reporting, and I think one of the things I wanted to mention is that some carriers have multiple and duplicate systems. Mm. So I worked for a large medium-sized carrier. We had 8 billing systems.
Whoa!
So think about trying to
acquisitions.
Partly acquisitions, partly because one system didn't address one problem that the other system did.
Oh my gosh!
So they decided that they needed this additional functionality that the old system didn't provide. They just bought another one. We had 3 BOP systems.
Okay.
So I think I was listening to a talk that the chief technical officer at the Hartford was giving, and he said every year they go through the examination and a review to determine if they should replace all their legacy systems. They had over 330 systems.
My God.
And he said to replace all these, they projected out would be, 50 years or so to do that, and the cost would have been astronomical.
Right. It's cheaper to just live with it.
So they just add systems.
Well, so was there is there anything that's new about that process? So I'm wondering, was there a time when it was harder? I guess maybe this is kind of coming to the maturation of the technology. There was harder to integrate or harder to replace back in the day, whatever that means, and so you were more likely to buy a new system then than replace a system. Is that true? Or?
Well, it begs to the question that you had, I think, when we initially talked about silo thinking.
Yeah.
And how underwriters and other insurance technical folks see their own fiefdoms.
Yes.
And they don't look at things. They don't look at things across the board from an enterprise standpoint. They look at it in silos. Mm. And we constantly see in the practice that we have predictive analytics falling into that situation, where an underwriting department here will have a predictive analytics solution that could be used by other functions within the organization. The other parts of the organization don't even know that predictive analytics solution exists. Mm-hmm. And as part of that, they have their own data models. So they have their own language, so to speak. And so it goes on and on. You may have, as an example, 10 predictive analytics solutions across the enterprise, and where it could be used across, for the enterprise, that it's not being used because of a silo mentality.
And so in the silo world, it's more likely to add a new system because they don't realize that the solution, it might be an easier way.
That's correct.
Coordinating organizational resources to make a bigger change.
Correct. That's correct.
This is hard to do.
It is hard to do.
Yeah.
Yeah. Yeah.
So one thing that's clear about systems is, to me, is that they're loathed for everybody I talk to, right? So the world that I tend to run in are the, call it insurance companies. It's the management, it's the buyer, it's the actuaries, right? Underwriters who aren't technology people, whatever that means. I wonder what that means, but they really don't appreciate, I think, how hard it is. That's one of the things I want to get into this call. This conversation was, how and what ways is this hard? And I think the way that it's manifests itself most clearly. I went to undergraduate business program when I was in university, and there was I forget which class it was in. It was probably a technology class of some sort that talked about how IT projects, that being a systems project, creation project, are always over time and over budget.
That's correct.
Right.
That's correct.
And one of the things that I've kind of pondered a little bit since then is to what degree that's a technology problem and to what degree that's a project management problem. I'm going to read a kind of a lengthy quote. Have you ever heard of the book Thinking Fast and Slow by Daniel Kahneman?
No.
So he's a psychologist who won the Nobel Prize in economics, oddly enough. And I'm going to read a little passage from this book of his, which I think is really interesting, and I want to get your reaction to it.
Okay.
And bearing in mind, to what degree is this a project management problem versus a technology problem? So here's the quote. In a quote, in the 1970s, this being Dan Kahneman, convinced some officials in the Israeli Military of Education the need for a curriculum to teach judgment and decision-making in high schools. The team I assembled to design the curriculum and write a textbook for it included several experienced teachers, psychology students, Seymour Fox, who was then Dean of Hebrew University School of Education and an expert in curriculum development. After meeting every Friday afternoon for about a year, we had constructed a detailed outline of the syllabus, written a couple of chapters, and run a few sample lessons. I asked everyone to write down their estimate of how long it would take us to finish. The average was 2 years. And he made a point of it being clustered tightly around 2 years, which I didn't copy down. Then I turned to Seymour, our curriculum expert, and asked whether he could think of other teams similar to ours that had developed curriculum from scratch. Seymour said he could think of quite a few, and it turned out that he was familiar with the details of several. I asked him to think of the teams and were they at the same point of the process as we were, and how much longer did it take them to finish their textbook project. He fell silent. When he finally spoke, it seemed to me that he was blushing, embarrassed by his own answer. You know, I never realized this before, but in fact, not all the teams at a stage of completion comparable to ours ever did complete it at all. About 40% fail. Okay, of those who finished, how long did it take them? Well, I can't think of any group that finished in less than 7 years, Seymour said, nor any that took more than 10. I grasped at a straw, and I said, when you compare our skills and resources to those of the other groups, how good are we? How would you rank us in comparison to the others? He said, well, we're below average, but not by much. In the end, the book project took 8 years. And so what's interesting about this, a whole bunch of things are interesting about this. One, that this was a long project, and that they were kidding themselves. This, by the way, this is Daniel Kahneman, who literally wrote the papers on this very kind of, on this bias. And he himself still fell victim to it. And it was amazing was that this guy who was in the group knew the answer himself, and he was amongst the people who averaged out to 2 years. He didn't say it was going to take 8 years. You're kidding yourself, right? So there's this inherent problem that we have as humans in predicting how long complicated things are going to take. What do you think?
I think it's a culture issue.
Yeah.
I think it's a cultural issue. And I can give you a classic example of why I say that. I was thrown into a CIO role for a big carrier. And the thrust was that I was being given 9 months, or a year rather, to build a new system.
Okay.
It was a BOP system.
Right. This being a price and quote system?
This would be a policy admin system.
Okay.
System of record.
Yep.
Right, as well as the quoting and the rating piece of it, the pricing of it. So, what I was able to do, and at the time you may recall the book In Search of Excellence.
I have heard of that. Yep, I haven't read it.
There was a concept of teamwork outlined in that book called a skunk works.
Okay.
And so my mindset was, because having been through these wars many, many times, that David Wright would have not only the job to responsibilities to build out his piece of the system and work as part of the project, but he'd have his day job to boot.
Yep.
So the mindset was there had to be 100% focus and an individual's attention span to do this project within the set parameters. So what we did was, and by the way, we also brought in a new tool to use. It was an Israeli tool called Sapiens, which was a business rules.
Yeah, I've heard of that company.
Yeah,
was that bought by Oracle or something? I think?
Yeah, it was bought by. No, they just bought somebody.
Sapiens did. I've heard of that company.
Yeah. It's Israeli. They built two things of note using this tool. They built the Israeli air defense system, and they also built the Atlanta Olympic Games reservation systems.
Okay.
So it was a different type of individual.
Project management kind of thing? Or?
Yeah. No, it's basically a coding process,
okay.
But they use rules. Instead of a COBOL code, they use these different. It's a different language.
Okay.
All right. However, what we did was we sequestered in a totally different building. The IT folks we needed, as well, we thought we needed, as well as the user community, the subject matter experts. Not only did they build the system in 9 months, all working together and accumulating and cross-feeding data, we also used a project management discipline that we called Black Hat, White Hat. Black hat was a hired gun, project manager who comes in, and his or her only charge was to make sure that the specifications for the system were done and they were going to be followed for the requirements of the system, and that the time frame that was set would be adhered to. The white hat was an internal project manager who basically made sure the right people were on the project to do the work, and also did all the reporting to the senior management and navigated the political waters. Mm-hmm. So with those new processes in place, we were able to build a system, a BOP system. And by the way, we used function count analysis and brought somebody in from the outside who was an expert in this to lay out the complexity of the system. And what they indicated that it was a very high complex system because we were building our own rating engine and such. Mm. We built the entire system in 9 months.
Okay. So these things can be done.
Well, let me just give you the antithesis of that.
Okay.
The next time around, we went with an internal project manager, kept the same skunk works 22 months, and the same function point accumulation.
Right.
For the next system.
And the difference?
Project management.
Right. Right. And what makes a good project manager?
Well, first of all, the problem with an internal project manager, and I argue this all the time, even when I sit on boards and people are having project problems, a project manager from internal may know all the project management disciplines, but they pretty much don't have the personal characteristics to do the work.
Right.
You have to be a pit bull.
Right. Put the black hat on.
Put the black hat on.
Right.
And you go native too quickly. I mean, you're native too quickly. So therefore, your scope creep becomes scope leap.
Yeah.
And you're fitting more and more into the project, and that dooms it to failure.
Right. So that's the big problem.
That's
is that people
have the
discipline
problems.
To stick to what they said they wanted to do.
One of the big problems.
Right. Any other problems come to your mind? Big ones?
Oh yeah. Data first. Data, when it comes to projects, is pretty much put on the back burner.
What do you mean by that?
Well, what needs to transpire is you have to have a data model to make sure that everything's standard when you call something. You also want to make sure that you're capturing the data that you really need. Mm-hmm. That the system has the capability of capturing the data that you require. And many, many times they don't detect that until they get into the last phases of the project.
Whoa.
Testing.
And they got to rip it all up.
And they got to go back and re-engineer and all of that type of thing. Whereas if they've done it up front as part of the planning phase of the project, they would have known that.
So why is it easy not to do that? So obviously this is a common pitfall and a big one. But where is the point at which this happens? What do you get distracted by that prevents you from doing that in a project?
I guess it's the fact that the project manager and the people in the project don't have the wherewithal and knowledge about it.
Right.
And it becomes an educational issue.
Yeah. So they don't have the discipline to stay on something.
That's correct.
Right. You get distracted by whatever the micro issue is there, and one after another. There's always a fire to fight, yada, 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 and you don't.
Yeah. And there are two Achilles heels when it comes to building projects, especially large, complex projects. One's project management that we just alluded to. The other one is a testing process. And testing generally gets short-shifted because it usually comes at the end of the project. And as a result of that, it's cut. Time is cut because they want to make the project deadlines.
Yeah, yeah.
And then therefore, the other failing is, and what I've seen across the board, is the lack of putting measures up front about what this project is supposed to achieve. Mm-hmm. I call them project KPIs. Key performance indicators. Very rarely, and that gets to the culture of the insurance industry too, by the way, David. What is this project going to achieve for us? Why are we doing it specifically? And then at the end of the project, did I achieve those measures? That tells you whether or not the project was successful. And number two, is it done?
At all.
Yeah, because some of these projects continue to go and go and go.
Yeah, yeah. The comment you made there about not having the discipline to actually keep on task really resonates with me. I think that that's a very general thing.
Called focus.
Yeah, focus. Right.
Yeah, you gotta have focus.
Yeah.
I remember sitting on a panel, and this topic was being discussed, and I said it's really focus. You know, you can't do two number one priorities. There's either one or there's none, right?
Yeah.
So.
What's interesting to me about it, and this was what I was kind of mulling over there, was why? You know, I guess there's maybe it's just an inherent blind spot for people to just get, or you know, maybe the opposite of a blind spot, is just get distracted by things, and you have a hard time kind of resetting, coming back and starting again.
Well, part of it is accountability. You know, back to the culture. You know, I cut my teeth in the banking world, and they had project management down pretty well, and there were severe ramifications if you're part of the project, or if you're a project manager, wasn't getting done. Whereas insurance, more laissez-faire.
Yeah, is that true? That's the case.
I think so.
And
I think so.
Where does that come from? Why
they don't like to be held accountable. You know,
why not?
That's a great question. I think it's just part of the culture that they grew up in.
Yeah.
You know?
One of the things that one of the fundamental, I think, differences about insurance culture and other cultures, which is something that I think might surprise people who aren't in insurance, is that it's so intensely relationship driven.
Right.
And so I think it's harder to hold other people accountable if you have this sort of close relationship with them. You know, captured, to use some of the language to what you used before.
Yeah.
And I think the root cause of that is just that risk evaluation and risk management is an almost inconceivably complex thing to do. Right? You can't foresee all the risks that are in the world, and so you have this relationship with your clients and your other counterparties that kind of see you through those kinds of things. And so relationships are really inherent in this risk management business. Yeah. And maybe because relationships are stronger, then the technology is worse.
Maybe. You know, it's a risk-adverse culture.
Yeah.
And as you know, and you may have read that, you know, there's been this big push around innovation and insurtech and all that. Well, that's a major disruption to this industry.
Yep.
And those who can afford it, I think will do okay, because they're willing to take the risks. They have enough surplus that if they lose money, it's not going to kill them. Where smaller carriers and mid-tier carriers are going to have a very difficult time, you know, adjusting to that.
Yeah, well, they'll have to merge or get bought. Or...
I did a master's degree paper on strategic planning in the insurance industry, and one of the things I uncovered was, one of the reasons that they're adverse to do strategic planning is you could be flush with money tonight, but if the wind blows tomorrow, you don't have that money anymore.
Yeah.
Because you got to pay it out in claims.
Yeah. Yeah.
So
it's not, you might not have the money to pay for a big IT project or whatever it is.
That's right. That's right. So they were very Johnny-come-lately as it related to the use of technology.
Yeah.
They were like one in a forefront when there was a payback. So you get rid of all the payroll clerks because the system can do it.
Yeah.
Well, that's all fine and well, but we're not going to venture outside of that.
Yeah.
And it's a lemming mentality. You know, the mindset is, you know, if this carrier is doing it, well, maybe I better look at it.
Yeah. You know, that maybe that's an interesting segue to kind of move a little bit off of technology into, you know, sort of more recent part of your career. And in particular, the thing that caught my eye the most, and one way in which we connected initially, was your involvement with AM Best. Yeah. And you're on a board of AM Best. How did that happen? I mean, it doesn't seem. What was the connection there?
Well, obviously, I grew up in the insurance industry.
Yeah.
And I guess over the years, just through osmosis, I gained some knowledge about the business. But I have a long relationship with AM Best. Years ago, they had a technology conference called eFusion.
Okay.
And as part of that conference, they would give out awards for innovative use of technology. And I was I had a number of speaking opportunities with them, but then I became a judge for their technology awards.
Okay.
And then it got into, as you said earlier, the relationships of knowing people, and then them assessing you as your ability to do things. And I guess along with that, you know, the varied experiences I've had looked attractive to them, especially as it related to, you know, things around technology and human resources and that type of thing. So I had that relationship. I was recommended, and you know, I've been sitting on the board now. It's a 4-year term, and I'm in my 3rd year. So
okay.
Anyway, But it's interesting because they are going through a big change.
They are, and the reason why I brought it up, and the reason for the segue was that you were saying how the insurance industry moves collectively.
Yeah.
And there are, in a lot of ways, I think there are institutions whose explicit purpose in some ways is to make sure that people are the kind of the average of the insurance industry is at a I'll call it solvent level, right? AM Best regulators, they have similar roles, right? And so they're kind of enforcing a kind of I don't know, similarity amongst carriers, at least in terms of a lot of different performance characteristics, which I think winds up drawing a lot of behavior from them.
Right.
And it's interesting that you came across them in a technology from a technology judging side of things. And I'm wondering, what to what degree what they think about the systems problem and the technology problem in insurance, and how are you bringing that perspective to AM Best? And they must have obviously felt like there was something to it.
Well, that's a great comment because as you probably are aware, their whole thrust over the years has been to determine the solvency strength of companies.
Yeah.
And with my perspective, and by the way, there's two outside directors, myself and another gentleman.
Okay.
And he and I align pretty strongly along the lines that when AM Best looks at how a company is managed, they really, just a little backdrop, is they have 4 pillars of evaluation. One is the balance sheet strength, and they run it through what they call the BACAR model. And that's a stochastic model that runs a number of scenarios and says, well, if this happens, how's this going to affect the balance sheet? So that evaluates the balance sheet. Then they have some practices around the revenue stream, cash flow, as I would call it, but it's really income and expense.
Yep.
They want to make sure that the balance sheet strength is sustained over a period of time.
Yep.
Then they look at the third pillar, which would be business profile. Where they do business, the type of business they write, that type of thing, to see if there's any threats there. And then they have an enterprise risk management pillar that they manage, and that gets into, how are you managing, what are the biggest threats you have, what is the value of those threats to the organization. So the argument that I have brought to the table is AM Best really starts to have to look at things like technology and data to determine whether or not a company is going to be able to sustain itself going forward. Because, as you know, in the older days, you looked at 3 things that differentiate yourself: price, product, and service. Well, it's really data today, because that's what really differentiates a carrier, the data they collect and how they use it, because each carrier uses it differently. And whether or not they're managing and controlling the data properly. And all you need to do is look at Solvency II that has taken place over in the EU to see what they're doing around data and what the impacts have been, to see how valuable that is. So,
what do you think AM Best sees, or as a director? What do you see as the opportunity for AM Best, if there is one right now? Because the regulatory, they're not regulator, but the rating agency world is a funny one. Yep. It's a funny business. It's a weird business, where you also tend to have these dominant players in certain regions. So AM Best is so dominant in the United States, but not elsewhere. S&P is somewhere else, and you have kind of other organizations that are lurking in the shadows. I don't know, how do I think about that?
Well, they have you're absolutely right in your remarks, and they have a concerted effort to grow themselves globally.
Yeah, but they probably felt that for a long time.
They have,
and having trouble breaking in.
Yeah, they have, and part of the board's charge will be to determine how they grow.
Yeah,
or if they grow.
Yeah.
So that's on the table, and that's something that is going to be vetted out. They are beginning to look at mortgage loan credits. They've started that process.
Right. New product, I guess.
New products.
Yeah.
So, they're looking at different ways to do that.
Yeah.
But it's something that needs to be vetted out further.
And why did they change the BACAR model? Was that a board level item as well?
Yeah.
Yeah.
Yeah. The board sits on something they call MAC, and that's the Methodology Advisory Committee.
Mm-hmm.
And any changes to the methodology for evaluating carriers goes through that group, and then ultimately has to be approved by the board.
Mm-hmm.
The core model was basically undertaken to make the process more transparent.
Yeah.
That's up for debate.
Right.
To use much more powerful modeling, but primarily what the results are going to be basically the same from what the balance sheet looks like.
Yep.
But they're also using the stochastic models to project out different types of scenarios that they're going to be turning over to the carrier.
Mm-hmm.
That this is what it would look like if it was a 1 in 100 year,
Mm-hmm.
1 in 500 year, that type of thing.
Mm-hmm.
So
what,
it just gives them more powerful technology.
more information.
Yeah.
More
information.
More data, you might say.
More data. Yeah.
One idea that another thing that we've talked about before is I think AM Best is just radically underappreciated as an organization. I think any company that can be so dominant in a marketplace like they are in the United States has to be respected for being that effective. And there's obviously these network effects where once you're entrenched, it's kind of hard to dislodge you. But still, not screwing up is a pretty good achievement over a 100-year time span.
Right.
Do you think AM Best is underappreciated as an organization?
I don't think so.
No?
No, I don't think so. I think in the States they're pretty powerful.
Yeah.
I mean, if you want to get a C-level executive's attention, that's all you need to talk about is AM Best because they're so sensitive to the ratings they get.
Yes.
However, if you go across the pond to the EU or UK, and Brexit, by the way, is a big issue that we're dealing with now because a lot of those laws have not been passed. It looks as if we're going to have to deal with those things, but it's not as appreciated over there as it is here, I don't think.
Yeah, and they have alternatives which are just as
and they have
there.
alternatives. That's correct.
Yeah,
that's correct.
So we're running out of time.
Yeah.
I'm wondering if maybe you could comment a little bit on what you think of as the future. I mean, you wrote an article recently on the survey you've done. You know, where is technology going in the insurance industry? InsurTech is all over the place.
Yeah.
You know, there's hype there, but I think there's a lot of reality there too.
Yeah.
Maybe not as much as the hype, but that doesn't mean it's not going to be transformational over time.
Yeah.
What do you think is going on? What's going to happen next?
Well, I think more and more data is going to become available for companies to address. I think what we're going to see is, quite frankly, those companies who aren't staying up with technology change and data change are going to end up being either going out of business or being eaten up.
Yeah.
That's my cut on it. I think the insurance carriers are beginning to understand that technology is more and more part of their lives. They're going to be relying more heavily on artificial intelligence and cognitive intelligence, those type of things. So, robots and things like that are basically on the horizon, I think. So, and I think attesting to that is the fact that they have invested, the insurance companies have invested over $2 billion in insurtechs.
Yeah. I heard that the projection this year, it was $2 billion last year or something, and this year they think it's going to go to 10.
Doesn't surprise me.
I mean, it is white hot.
Yeah. Well, it's a way of bringing innovation in.
Yeah.
So it'll be interesting to see how the cultures clash.
Right. I agree.
You know?
I agree. Which culture is going to win? I mean, the insurance culture exists for a reason, and the technology culture. I mean,
right.
Stay tuned.
Yeah, exactly.
My guest today is Bill Jenkins. Bill,
Yes.
Thank you very much for joining me.
Thank you, David. Pleasure talking to you.